I just allocated $100,000 into two of the strongest companies on the planet, Microsoft and Nvidia, but not for the reason most people buy these stocks. Most people, what they do is they buy these stocks for growth. I buy them for juice. And if you're new here, juice is what I call the extrinsic value of an option. It's the income. It's the part of an option that decays every day, every week, every month. And if you know how to do it safely and systematically and rules-based, you can harvest that extrinsic value. Well, you can turn it into predictable cash flow, or what I call the juice from your portfolio. Today, I'm going to show you why these two stocks, Nvidia and Microsoft, are my favorites for generating juice, and exactly how I do it using a defensive, rules-based approach that high net worth investors appreciate. So here's the truth. Most investors are taught to buy and hold and hope that the market goes up eventually, right? That's not a retirement strategy, especially if you're between 45 and 64 years old. That's not how high net worth investors think. And it's definitely not how you build predictable cash flow from your portfolio. Hope doesn't pay the bills. Hope doesn't create freedom. Hope doesn't give you confidence about retiring earlier. But juice does. Juice does because juice is real. It's the extrinsic value, the out of the money amount that decays over time. And when you sell options against stocks you already own or you want to own, you get to collect that juice, that income. And unlike dividends or share appreciation, juice is something that you can create predictably with rules, with discipline, and without guessing market direction. Now, to keep the math clean and the strategy clear, here's the scenario in this educational hypothetical video. I've taken $100,000, which for many high net worth investors is a reasonable pilot-sized allocation, and I've split it between Nvidia, owning shares and selling covered calls for monthly juice, and then Microsoft, using cash-secured puts to generate juice and acquire shares at a discount. So why these two? Well, because they sit at the perfect intersection of quality, stability, liquidity, and optionable characteristics that make them powerful juice producers inside a defensive framework. Now let's break down the fundamentals. Not hype, not headlines, the real reasons these companies belong in a rule-based cash flow strategy. Let's start with Microsoft, because for high net worth investors, this is the anchor. This is stability, predictability, and resilience. First, it's got a dominant and diversified business model. It has multiple cash flow engines. It's got enterprise software like Office and Windows and Teams. It's got the Azure cloud. It's got LinkedIn. And then AI integrations across the entire platform with Copilot. And then gaming and hardware. This isn't a one-product company. It's a global subscription empire with lots of recurring revenue. And you know I love recurring revenue. The next thing is lower volatility. So that's a smoother juice strategy. So comparing it to high growth tech names, Microsoft tends to move more slowly, and that's a good thing for generating juice. Slower movement equals more predictable option behavior. More predictable behavior, it's safer and smoother juice harvesting. All right, the third point here is strong fundamentals. Microsoft continues to produce strong revenue and earnings growth thanks to demand for cloud, AI, and that enterprise software we talked about. Analysts frequently highlight how earnings and revenues outpace traditional tech averages in key segments. And AI is now woven into every layer of Microsoft's ecosystem, from Azure to Office, and that strengthens their long-term competitive format. How I generate juice with Microsoft? Well, instead of starting with covered calls, I use cash-secured puts. Why? Because it lets me get paid a premium today, and if the stock drops, I get to buy it at a discount. If it doesn't drop, cool. I keep the juice and I live to repeat it. I sell slightly out of the money puts on Microsoft, 1 month out, not chasing big premiums. And I'm not trying to time the market. I'm just harvesting that consistent extrinsic value decay, the juice from a world-class business. Now, this is a professional, rules-based approach that removes emotion and focuses on predictable cash flow. Now, let's talk about the other side of the $100,000 investment here, and that's Nvidia. Now, Nvidia is a different animal. This is not the stability anchor. This is the growth engine that you convert into juice. Remember, it's all about cash flow. So let's start with the reasons why I like Nvidia. First of all, it's the undisputed leader in AI and GPU computing. Nvidia sits at the center of the AI revolution, and it's the GPU's power. By the way, GPU is graphical processing unit. It's the chipsets that go in there for AI. Here are the things that you need to know. Chipsets and chips go into data centers, large language models, which is the AI that you know, like ChatGPT, cloud computing, autonomous applications, high performance computing. NVIDIA's technology leadership has helped drive strong growth in AI-related hardware, contributing to significant increases in revenue and earnings. Okay, the second thing I really like is high volatility. In this case, it's more juice potential. NVIDIA moves. Sometimes it moves a lot. And volatility, when managed correctly, it's not a risk, it's an opportunity. I mean, there's risk in everything, but there's also opportunity too. And because more volatility means more extrinsic value, which means more juice, I like NVIDIA. And I like it because it's ideal for covered calls inside a defensive system. You own the shares. You sell a call slightly out of the money in this case. You collect juice. You cap your upside for sure, and you do it intentionally, but you create predictable cash flow, and high net worth investors really appreciate predictable cash flow. Now, we're not trying to guess price direction. If you want to guess price direction, that's a totally different strategy. We're engineering outcomes. The third reason I think this is cool is this trade-off. You limit your upside, but the stock can move quickly and get called away. That's fine, because remember the philosophy. You're not here to speculate. You're here to convert volatility into juice. And that's why NVIDIA is such a powerful part of my system. It complements Microsoft in this case almost perfectly. One is stability, one is growth, but together they both produce juice and do it in a fairly stable fashion overall. Now let's talk about how I actually do this, because the cadence and the strike selection really matter here. First of all, I like to use monthly options in this case. I use monthly expiration cycles, not weekly, for this part of the portfolio. Why? Well, monthly options have more extrinsic value, more juice. They decay more predictably. They fit the rhythm of high net worth investors who want systems, not screens. They reduce the noise of constant management. I mean, I don't know about you, but I don't want to sit in front of my computer all day waiting for my cash flow. I'd like to just kind of set it and forget it. The next thing is I like them slightly out of the money. OTM sometimes they're called. And for puts in Microsoft and for the calls in Nvidia, I want strike prices that are close enough to generate juice, far enough to reduce assignment risk, and aligned with the stock's natural movement. And this is where experience and rules come into play. But the concept's really quite simple. You're selling time. You're selling extrinsic value. You know what that's called by now. You're harvesting that juice. The third thing that I really like is that its risk is managed and not eliminated. Now, this is not risk-free, right? Everything has risks. Stocks can move fast. Puts can be assigned. Calls can be assigned. Market volatility can spike, but that's why we use the fortress rules. And if you don't know what that is, I have it in my system. It's position sizing, volatility filters. We are using a defensive stress test system to ensure that every trade is survivable. And that comes from a trading plan. You've got to know what your plan is going into a stock. If you learn nothing from this video, you've got to learn that a trading plan is so important to what you learn. When I teach this strategy to high net worth investors, I see the same reaction every time, guys. This makes so much sense. Why hasn't anybody told me about this before? Well, it's because most advisors focus on accumulation, diversification, buy and hold, long-term appreciation. They're fine, but they don't really pay you. You have to hope that the stock market goes up and takes care of it for you. The juice, though, pays you cash flow. And when your portfolio produces juice, well, everything changes. You stop relying on selling shares. You smooth out your volatility. You create predictability. You accelerate retirement. You gain flexibility. You reduce financial anxiety, and you start feeling like a business owner because the portfolio really pays you. And this is the foundation of the cash flow machine. You know, I like to have everybody treating their cash flow machine like a business, because it is. So it should have working capital, and you need to manage your inventory, your stocks, right? You need to manage your cash flow too. So that's why I put $100,000 into Nvidia and Microsoft. Not for speculation, not for dividends, not for hope, but for juice. So these two companies, when paired with a disciplined monthly options strategy, well, they create a powerful 1-2 punch. Microsoft for stability and discounted entry using the cash secured put method, and then Nvidia for volatility and premium generation using covered calls. Both of them produce the juice, both fit perfectly and beautifully inside a diversified high net worth portfolio. Both are part of a smarter, safer, more predictable way to retire with confidence. Now, if you found this all helpful, subscribe. And in the next video, I'm going to break down exactly how to build a rules-based juice portfolio that gets you paid consistently without having to pick the tops and the bottoms. And if you want to go deeper, this is exactly what we teach inside the cash flow machine, how to build weekly, monthly, juiced up cash flow so that you can retire earlier, safer, and with true lifestyle freedom. So I'll see you on the next one.